Hi, this is Shubhankar Chakraborty from American Academy of Financial Management. We have been getting a lot of queries, and through these videos, we are just trying to address each one of them. So today's query is, what are the limitations of using relative measures of risk? And can you discuss factors that may affect the accuracy and reliability of relative risk measures and potential challenges associated with comparing risk across different asset or investment portfolio? Now, let us understand what are the limitations of using relative measures of risk, such as standard deviation or beta for that matter. All right, so the first one is data availability and quality. Now, relative risk measures are based on historical data. And there are many instances in case of many asset classes where the historical data which are available are not of a very high quality, and sometimes they are not available at all. And that scarcity of data or accurate data can create some sort of discrepancy, and that will lead to a risk assessment which will not be accurate. So that is one limitation that you have on using relative measures of risk, such as standard deviation. The second one is assumption of normal distribution. Now, when we do this data analysis based on the data, the historical data, it is being considered that it will move in a normal distribution. But that is not the story. That can never be the case, because each asset class will move in its own dynamic way, and it's continuously moving. So there cannot be a normal distribution at any given moment. There will be some kind of a skewness. It will be present. That skewness will be present in the data, and that is how the data will be presented to you. So you cannot have a normal distribution of data, and that is another assumption that we make when we use these relative measures of risk, and that assumption is wrong. I mean, in real-time scenario, it can be wrong. Right. The third one is correlation dynamics. Now, all these asset classes and its pricing, they are moving, on a continuous basis, and every time it moves, it's like it's like multiple gears they are moving simultaneously. हर कुछ अपने हर एक asset class का अपने एक दूसरे के साथ एक relation है, and every asset class is moving. Every asset class, the prices are moving. तो आप सोचो multiple gear अगर एक साथ move करने लगे, तो what happens? Every asset class, the moment that price fluctuates, its relationship with the other asset classes change, and similarly for other asset classes as well. So ये जो relationship, ये correlation, ये continuous change हो रहा है. So that's another thing on a static basis. अगर आपको किसी भी calculation करना है, so you will have to consider data of a particular time, of a particular situation. That is a static data. But the whole asset class and the universe of this asset class, they are dynamic in nature. So वो assumption अगर आप करोगे, वो correlation अगर आप निकालोगे on a static basis, that might be true for that particular time frame, but then it will not be true forever. Hence, that is a limitation, because the inference that you bring out of it will again be wrong. The fourth one is difference in asset class and their investment style. So each asset classes, they are different from one another. So you cannot compare an equity investment with a debt investment, or an equity investment with a real estate investment, or a debt investment with a gold or a commodity investment. So each investment is different, and the investment styles are also different. So this comparison of multiple asset classes again creates a discrepancy, because हर एक asset class अपने अपने अंदाज से move करते हैं, और उनके जो inherent differences है, that cannot be ascertained at one single platform. So that is another limitation. अगर आप relative measure of risk use करते हो in finding out the risk of your portfolio, so multiple asset classes will have their different risks, और ये सब एक पैरामीटर पे नहीं आ सकता है. So that's another limitation. The fifth one would be illiquid or unique assets. Like, say, for example, if I have to compare between a large cap stock and a private equity is illiquid, and a large cap stock can be traded at any point in time. So maybe both are in a same industry. So both the companies. Now, let's say I'll take example. I mean, and these examples are not to be used for trading and all, because this is just for academic purpose. Let's say, अगर मुझे एक आनंद राठी एक इन्वेस्टमेंट बैंकिंग है, उसके साथ एक नया इन्वेस्टमेंट बैंकिंग कोई भी प्राइवेट इक्विटी में है, उसको लेना है, ब्लू लेक और कुछ भी ले लेना. सो ये दोनों को आप कंपेयर नहीं कर सकते, बिकॉज वन इज ट्रेडिंग, the other one is not even trading. Or the other thing, if I may now put a third angle to it and bring in ICICI Securities. So that is a well-known company. उसके साथ आप आनंद राठी को कंपेयर नहीं कर सकते, although both are in same industry, but you cannot compare these two companies, these two stocks. They're very different in their own way. So and if you compare this with private equity stock that is illiquid, the other assets can be art, which is completely liquid and it's unique. Asset classes like REITs, you cannot compare that with a normal real estate, or you cannot compare that with a normal debt fund. So that's another thing. So again, these different asset classes, they cannot be measured based on a same platform or a same parameter. Then is time horizon mismatch. So let's say you are investing in a debt fund or in a debt instrument for 10 years. That will have its own risk. And there is another investment which is on a short-term bond. Now both these are same in a category. They are same. They are both debt investment, but they're very different in terms of their time horizon, and that makes the risk parameters very different. So again, you cannot bring them both on the same platform. Again, the relative measure of risk cannot be used here because the time horizon in both cases are very different. Then behavioral bias. So there will be certain behavior against certain asset classes which will prevail at a certain point in time in the market. तो उसके चलते क्या होता है, एक unusual trading हो जाता है किसी भी एक asset class में. जैसे अगर all of a sudden what happened in 2022, all of a sudden in 2021 IPOs were raining, right? Or suddenly 2022 आते IPOs started getting devalued, and all of a sudden you see one IPO getting devalued and or one newly launched IPO getting devalued. Similarly, the other newly launched companies are also getting affected, and we have seen this. We have seen Zomato getting devalued, and at the same time, the company like Nykaa, that also started losing its valuation, although there was no correlation whatsoever. But this is behavioral bias. एक IPO नीचे जाता है तो लोगों को लगता है सारे IPO नीचे चले गए. And it all started with Paytm. That went down, and similarly, all the IPOs started taking a hit. Although financially, both were very different. All were very different. But then this is behavioral bias. That's another reason why you cannot put a same parameter of risk to every all these companies. You cannot put that because behavioral bias jab aa jayega, and you cannot put the other companies which are trading in NSE. You cannot bring them on the same platform in terms of risk, because behavioral bias has been against certain companies. They are not against the HDFCs or the large caps. So that's another reason why you cannot use relative measure of risk. Now, these are certain limitations. Now, how to overcome this? Now, to overcome these limitations, you have to consider a range of risk measure, and this should include the absolute measure of risk, which is stress testing. So if you have to measure risk in its absolute term. Whether I have a probability of loss, a probability of default. If I have a probability of default, how much I'm going to lose? If I go through this stress testing of my portfolio, what is the result of it? Kitna nuksan hone wala? So this stress testing based on a scenario, create a scenario analysis. So these are the ways you can overcome these limitations of relative measures of risk, and you can understand the underlying drivers of risk of each asset class and portfolio at large. So these are the ways you can avoid or you can counter the limitation of relative measures of risk. Thank you.